Okay, this is a video on how to trade the setups on the initial balance range and what it is. Okay, basically this area here is the initial balance range for earlier today. When I say that, let me explain first of all everything on this indicator, what I have here as far as indicators. So I'm gonna go here, indicators. Okay, let's look what I have on here. These are all free on InduTrader. You can just go search indicators and pull these up. I've got the current day open, high, low, the price line, the Fibonacci pivots, exponential moving average. I've got the 200, and the 8 is more for scalping momentum. I want to see where that scalping momentum is at. So that's all the indicators I have on here. This is the open, high, and low. Right now I have the 15-minute chart up, so you can see it's right back at the open after it made a high. And this is the Asia session, what we're in right now. It looks like it's making a lower low. The Fibonacci pivots, the R3, R2, R1 resistance points. Right now, that's the open pivot point, and I like to leave this. I like to leave the initial balance range, and change it to the hour if the 15 is like way away from it. Okay, I like to leave this because it is an attraction level for it to come back in and tap it before it moves away, because it is an attraction level. So until this actually comes in and hits it, I'm gonna go ahead and leave this up. And once we get the new range tomorrow, I'll go ahead and mark that up. So I've got the 200 here. This is the 8 exponential moving average. If you look at the 8. I mean, if you just want to use that for confirmation to stay in trades, you could. It's actually pretty good. But along with the levels, I just like to see where the momentum is at. So the 200s and all these I use for confluence, but the main trades I look at is the initial balance range, which is this here. Now let's go over what this initial balance range. Like I said, this is the hour range. Okay, let's find. Okay, this right here. This is the hour. Okay, this right here, this candle here is the 15. Okay, this candle right here. That is our 15-minute opening range. Okay, that's the first 15. That's 8:30 to 8:45. This here is the 30-minute range, and this here is the hour. Okay, that's the hour. So that gives us our 1 hour range. And usually I like to play around with that, the 15 to 30, and then I extend it to the hour just to get better setups. So I'm gonna leave that at the hour. But it's gonna be up to your discretion. So 1, 2, 3, 4. The first 4 candles is what makes up the range. And you can see how it respects this range, because this is 8:30, 8:45, 9 o'clock. That is the new, the start of the new 4-hour candle. And I'll go over that here in just a second. I just want to show you guys the range. So you can see we're within this range here. And when you're taking trades, especially if you have support, if you're at S3, S2, and you're at the low of the range, I would take those trades all day long. Just buy down here, because it never did break lower than that. As you can see, the range, it came down almost to the low, but it never did make a new low of the day. So this candle here, this candle here, and this candle here, this candle here, that's 4 candles that makes up the hour range. As you can see, the very next candle, it went right to the top of the range. It didn't really do but it came down, it didn't close, and it started going up. As soon as you see this pattern here, you know we're going to have an up move. So I would just focus on buying the market, because we were at extreme levels. We were like at S2 and whatnot. So on this initial balance range, you can see on the 15-minute, if we change this to the 15, which is that candle right there, as you can see the 15, a lot of people trade a breakout. So it broke out, buyers would be buying that market. But that's actually a fake out because it retraced. So, but you can still take it, 15. As soon as it broke the 15, my bias is to buy it. So, and NQ always does a reversal. And if it doesn't break the low, it will always take out the high. So that's why. So basically, if you see this pattern here, it never did break this low, so you would be looking for buys and just put your stop right below here. But my main objective this morning when I came to the market, because I always start off with the 4-hour chart, it gives you a bigger picture. And I actually started scalping off this 4-hour chart. If you look at this, look how clean that price action is. I mean, as soon as, because this is the 5 to 9 candle right here, this candle. Okay. Actually, this is not the 5 to 9. This is the 5 to 9. This green candle right here, that's 4 hours. That is 5 to 9. 5 in the morning to 9 Central Time, 6 to 10 Eastern Time. As you can see, this candle never broke this low. So we were at the low right here. And as soon as this candle closed, because this is where the open happens, the 8:30 to 8:45. And then this is the 9 o'clock candle. As soon as I see this green candle, I know price action wise for me is buying, because you are already at S2. See, you're S2, you're at the low, and especially after this move here, there's always a retracement. As you can see, I mean, that's a pretty clean retracement looking at the 4-hour candle. So when I saw this price action on the 4-hour candle, I was basically going to buy and put my stop right below here. Okay, especially this is the 5 to 9. This candle here is the 9, 10. This is the 10 to 2 candle. This candle right here, 10, 11, 12, 1, 2, yeah, Eastern Time. It's 9 to 1 o'clock Central Time for me. So this candle right here, because this candle's green, I knew this candle was going to be a follow-up green candle just from price action, because this right here was going to get taken. And when I was in trades, I was looking for this level to get broken, which we did, because this is London's high, right? This is London's high. And of course, this is the low. New York tested it, but that was actually the low of the day before this move here. Look at that. So this candle right here, this is during the open, 8:30 to 9 o'clock. And then this 9 o'clock candle is the bullish candle for this green candle here. Okay. And so as soon as I saw that broke up to over the 1 hour, I knew we were going to have a bullish day, especially after seeing this price action here. There's always a retracement, as you can see right here. I mean, it came back up and it went right to those levels. But if you look at it at the 15-minute, I mean, look at that price action. I mean, this is the 15-minute compared to the 4-hour. And that's why I've been liking the 4-hour trades, to be honest, because it makes it easy for me. When I see this candle here and it was 9 o'clock, I knew I was going to be buying this. I was just waiting for pullbacks. Even if it came against here, I knew. And if I had my stop below here, I mean, that's a short stop. And I knew I was going to be buying this market all day long. And that's what I did this morning to get profits. As I just bought this green candle. Even when it retraced down here, I was in buying. I was in the buy zone. If it comes down here, I was going to buy it. Even when it's close here, I was going to buy it to break that. And so that's how you use the 4-hour candle. I mean, I really love the 4-hour candles, especially the 5 to 9 o'clock, the 9 to 1. Like this candle, this back-to-back candle is where the momentum. If this one was red, then I would be looking for this to break and just focus on selling. But this was a green candle at the open, and so my focus was buying. And the better buys on this price action here, on this initial balance range on the hour, is just to wait until it gets close to here and then buy it. And keep in mind, you're scalping 20 and 44, and you could even up the contracts, or you could just scalp 2 micros at a time and just hold it. You know, buy it down here and just hold it down here, up here, and just put your stop here. So this is the 1-hour initial balance range, because let's look at the 15-minute. We'll go over the price action. As you can see, the market's taking a little bit of a dump right now, which it always does. It's bound to. So let's go back here and look at this. Look at the price action. So like I said, what was the 8:30? Okay, that's the 15-minute. Okay, this here was the 8:30 candle. 8:30, 8:45. This one was 9 o'clock. So that one right there, that's the hour range right there. 1, 2, 3, 4. 8:30, 8:45, 9, 8:45, 9, 9:15, and then right at 9:30, you can see this is the 9 o'clock. 9 o'clock did a retracement, but it was a bullish candle. And as soon as I saw this, as soon as it was coming down here, I just bought it, because we were already at extreme. I just, mentally, if it was going to bypass here, I was just going to stop out. But you can buy with IBR levels as soon as it breaks. That's why I changed this from the 15. As soon as it broke the 15, I knew I was looking for buys. Especially I knew after the market was at a very low level. So it broke the 15. I'm looking for buy setups, and you could just wait for until the market settles. If you're afraid to scalp in, I wasn't afraid to scalp down here, even on these moves, and scalping up here, because I knew we were wanting to go to a level to get to. So you can see the setups, and NQ always does this. 15-minute, here's the breakouts. People were taking breakouts trying to buy it, and then the market retraced, took a bunch of stops out. It almost came down here, but it never broke this low. When you know it never broke this low, the next candle's green like that, then it's going to be a bullish day more than likely. So you could just take the bullish day. It went right up to the IBR. Look at that. I mean, even if you bought it here, you just hold it to this IBR. You want to take it from, if it fails, you want to take it to the IBR. Even if it comes back here, you want to take it to the IBR. And that you could be done within those trades right there, within the first two hours of trading. You can wait for setups. This is the afternoon. Came back into it, and then it went up. So basically, that's how you trade the IBR. And like I said, I like to move it from the 15 to the 30 and to the hour, depending how big the range is. Usually, sometimes the 15 and the 30-minute will be right next to each other, and the hour would be right there. But today, the 15 here and the hour is here. So that's why I switched it to the hour and wait for better setups. Retraces down here, you buy at the low, and you get out at the IBR high or close to it, depending what type of risk, how many contracts you have, if you're scaling in aggressive like I do sometimes, if the setups are good. But that's basically the IBR level and how to trade it. This is the 15-minute, and that's why I look at the 4-hour chart, because it gives you a bigger picture and levels. So look at this. This is the London candle, and I knew we were going to take this out because it always takes out the London candle. See, New York open here. This is our 8:30. This is the 9 o'clock movement right here. This is the 9 o'clock candle. Look at the 9 o'clock. Did that retracement, that fake out, never broke the low of the IBR. And even when it was coming down red, I was scaling in. I was buying, because mine is just 20/40. So I'm in and out of these trades, because look how big these wicks are. And if you're just trading off this, you could just wait until it breaks this, then you buy here and just put your stop here. So there's many different ways to scalp, many different ways to trade. You could take one trade when it gets here, put your stop here, and just let it ride to the IBR till the IBR's hit. and you'll be done. But I knew this candle here was going to get taken because this is London liquidity. We were close down here in New York, and then I knew we were going to come and take this high out, and which we eventually did, because keep in mind, this is a 4-hour candle, so it took a while, but we eventually took it out. And that's when I know that, I'm not scared to get into trades. Even if I get into trades here, I'll hold it. Even if it draws down against me, I'll go and scale in trades. Because using micros, you could, be in 8, I think I was in like 8, 10 trades at one time, and they were going against me, but I knew where my point was, and it just wicked up and took all those trades out. And so even with micros, you can average, $500 to $1,000, and you'll be done. Like this trade's a pre-market, Asia trade, 837. I'm just trading the gap. So this is for tonight's trade. But that's the IBR. You can switch it from the 15 to the 30 to the hour, depending how big the range is. And then because I'm getting to the point where I like trading a 4-hour candle instead of the 15. But the 15 gives you more precise entrance. Because, let's look at the 15 here. Look at that. That's just rangy all day. But I knew the overall picture was buying it. So every little retracement, I even bought here. When it came over here, I was buying and held it, bought. I had like 3 contracts, 3 or 4 orders all in once. And once a candle hits, it took all those orders out. But I was in this range, and you could basically, if you're using micros, you could just go in 2 micros at a time and scale in, because even though you're buying here, or you could just wait until it gets to down here at the quarter level and just start buying there and just hold it to this IBR, and you'll be done. But I was buying on these red candles. I was buying here because I knew. And as soon as this green candle hit, it took all my profit, and then it did it again. It came back again, and I was buying. As soon as this candle hit, it took all my profits out, and I was even buying up here, going to break this, because I knew that this level up here was going to get taken. That's the London high. So, you could trade that because, more than likely it's always going to be in a range unless it's trending. I actually do better when the market's in a range, when it's price action like this instead of just trending. So you can trade that 15-minute, or you can go here and just make it easy on yourself. Look at this 4-hour candle. This candle here closes at 9 o'clock. This is the 9 o'clock candle. Now, when I saw that this candle closed green, I knew I was bullish, because I wanted to take this level out. This is what I was looking at. So everything in this, all the craziness is in this candle here that you saw the whipsaws up and down on the 15-minute. But look how clean this candle is. When it came down here, I was just buying, even though it was red, and then it wicked up and took all my profits. So basically, that's how I trade the IBR level. But let me go over the sheet here. The initial balance range is from 9:30 to 10:30 Eastern time. You mark up the highs and lows, what I just did here. This is the highs and lows of the 1 hour. Okay? That's the highs and lows of the 1 hour. Mark up the highs and low, identify, mark it up, so that way you know what levels. And plus, with the indicators, that it lets you know if you're at support or resistance, and that gives you another confluence. Plus, it lets you know where the 200 is at, and that's another confluence for me. Because if you go to the 15, look at this. Let's see here. Look where the 200's at. So we were way away from the 200, and it always goes back to the 200. It will attract to the 200. So after that drop here, we never went back up there. After this low, as soon as that happened, we were at like support 2. I knew we were due for a retracement, and I had the 200, I had the open, I had the high. There's a lot of confluence up here, and even the IBR previous was up here as well. So there's a lot of confluence, plus you're at the S2 supports and the IBR lows down here. And when you never break this low, you're looking to buy. Just buy and hold until this IBR, and then you could be done. Okay, let's look back at our pre-market bias. I always review pre-market trends, what the overnight price action is. Just watch out for news. Volume and volatility, of course, 8:30 to 9:30 are your most volatile times. So you could be in and out. You could be done within your trades within that hour. You could wait for a breakout. Number 3, you could wait for a breakout or rejection. Breakout trades, I usually don't do breakout trades. I'm trading the IBR levels. People trade the breakout and the rejection, but I'm just looking at the levels. A lot of people use volume, price action. I mainly look at the price action and the volume. I don't use the VWAP. I look at the 200. A lot of traders look at the VWAP. So enter on confirmation of a breakout or rejection. Just enter at the levels. If you know the levels are good, enter. Don't be afraid to hold it, and put your stop. With micros, you can scale in and not be afraid of drawdown. Stop loss, mental stop loss. A lot of people have 50, but NQ is pretty crazy, so it moves volatile. Like I say, profit targets 20-40 is my scalps. Sometimes I'll use the 100 2 micros, and then just manage your trades. You could trail stop. I just let it take my profit. Or I move my stop to where a level I know where it's going to hard to get to. If it gets there and I take a loss, then so be it. Yeah, that's about it. And I do these videos so that way to help other traders look at how to trade the IBR. But it's a proven, it works. There's a lot of professional traders that trade it, and it just works. So that's how to trade the initial balance range on the 15-minute, the 30-minute, and the hour range. You could, be done within your first 30 minutes or an hour or 2 hour at the most and be done. Any questions? Let me know.